Good evening, everyone, and welcome back to the Startup Series. I'm Govind Kedia, your host, and I run Arctic Invent, which help companies increase their enterprise value by way of building business-centric IPR portfolio. And my company has worked over 1,000 plus startup over Europe, US, and India, helping them build massive value on their intellectual property and technologies. From its inception, the Startup Series has looked at providing answers to questions the startups have, aiding them to overcome the hurdles in their day-to-day running. It helps them to be better educated, understand the different perspective from investors, from the industry leaders. And this time, we go across the aisle to provide answers to the men behind the money, the investors. Although it is going to be very relevant for founders because it is very, very important to understand the perspective of investors. And so if you are a investor, it's a right place to be. And if you're a founder, it's also a right place to be because you can learn how investors' interest are important and also what are they looking for. So fueled by the energy of tech savvy Indian population and digital revolution and driven by rapid adoption and strong government initiatives, the fintech ecosystem is buzzing with innovation and potential. As per traction recently, I was amazed to see there are more than 8,000 companies in India with aggregate funding of $8.9 billion in India with five active unicorns. So that really shows the potential of fintech in our country. So are you ready for to explore the fintech frontiers as your next investments? How do you spot startup potential? What fintech founders look forward to being part of this innovative industry? To answer these and the other question you might have, our guest speakers both working in the fintech ecosystem in their respective capacities and have very deep knowledge on this topic. So my first guest speaker is Nikhil Gupta, the director of strategy and alliances at Marwadi Catalyst (MCATS). With over 2 decades in diverse sectors like fintech, real estate, and health tech, he specializes in business strategy and wealth management and is adept in nurturing startups and exploring opportunities both domestically and internationally. His expertise spans across BFSI and a deep understanding of wealth management product and services, including AIFs, equity, and banking. Welcome to the Startup Series, Nikhil. Pleasure to have you on my show.
Thank you so much. Thank you so much, Govind. Thank you so much for your very, very kind words.
Great. And joining him, Abhishek Garodia, the founder of CapTable.in and an active angel investors, a trailblazer in the business and catalyst for change. He transitioned to angel investing in 2020. He then broke a new ground with CapTable, a revolutionary platform democratizing startup investments. Earlier, as a founder of AWC Retail Services, he has successfully scaled numerous D2C brand across spectrum of industries, showcasing unparalleled expertise in e-commerce, branding, and market strategy. Welcome to the Startup Series, Abhishek. Pleasure to have you
Thank
here.
you. Thank you for all your words. And thank you for all the viewers for joining in today. Looking forward for this exciting session.
Great. So, I think before we start, let me remind my audience is to also drop their questions that you may have. We will definitely pick them up as we progress our conversations, and also put your comments, put your questions. And it's a great opportunity to interact with our panelists, and we'll be more than happy to get there. Now, let's start with a very, very basic questions. Why fintech? I think isn't the boat has sailed already, a lot of people would say, because of lot of already fintech revolution has happened. UPI is successful, everybody is on UPI. Has fintech really is a gone trend now? So what's your view? Why fintech? What is why fintech is very exciting today's world? So Nikhil, over to you.
Uh, Govind, thank you so much to start this session. In fact, with a very, very direct and a very, very interesting question. In fact, and it kind of gives me immense pleasure to answer this because in the BFSI space, like you highlighted during my introduction, with great amount of conviction, I can say that we have actually seen an evolution happening in the BFSI and the fintech space now. If we actually look at some data and if we actually look at the transition that has come our way, especially in a country like India, in the past almost about a decade or a little over that, uh, I still feel, personally speaking, that there is lots more that we can still do in this particular space. Well, having said that, I don't think it'll be appropriate to say that we have kind of missed the bus. But yes, I will not be wrong in saying that there's a lot of more developments that we are expecting to happen in the fintech space. And the good part is that globally, lot of global players, in fact, they're eyeing India in terms of our skill set, our expertise in the finance and the finance tech space. So fintech definitely has always been an evergreen sector, and we are blessed now, in fact, that we've seen enough and more success stories and case studies where we can also, I will not say replicate what is happening in the west markets or the rest of the asian and the apac regions, but yes, we have our own skill set and expertise to nurture that, develop that, and come out with fresher or newer solutions to the bottlenecks and the pain point areas that the ecosystem has been seeing so far. Also, in fact, secondly, to add to that, uh, in the startup ecosystem specifically, and in the fintech as a domain area, the need and the importance of the right set of partners, the or I would say rather right partners with the right skill set and expertise is something which is much required. Once we are able to align that, I don't think anything stops us from growing in that direction. And fintech is definitely something which is very close to me because I've spent more than 2 decades in this space. So वो एक बोलते हैं ना कि जैसे वो एक खून में है अभी. So fintech हो, finance हो, real estate हो, BFSI हो, banking हो, these are core strengths for a country like India. It's nowhere that we are going to miss this bus ever.
Sure. Great perspective. I think what I, of course, hear is money will never be get old, right? So anything related to money will never get
Oh
old.
yes, absolutely.
So, so that's a great insight. So Abhishek, what's your view? You're on mute, Abhishek. If you can unmute yourself, please.
So, as you rightly said, Govind, that money will never go off. Money is evolving the way human being has evolved in millions of years. Earlier, it was barter system, then became the monetary system, then the digital era is on the verge. With every evolution, there is always set of problem that comes out, right? There was a time when we were using e-commerce for digital payment. Then somebody evolved with the OTP verification automation that without putting in the OTP in the checkbox, you can get the auto verified. So that kind of evolution we have seen, and that will always pertain as we go further. So as Nikhil said rightly, that finance can never go out, but as an investor, as an ecosystem partners, what I see through is finance as a one part, and finance enablers are the other part, which are making these transactions industry involved much bigger than the before, right? So the consumption, the ease of adapting finance is something where we are putting our foot forward. Just not about one thing uh, we are talking about. We're just talking about the whole ecosystem as a fintech, right? And that's where we are very broad about it. That not only the finance, but more of a tech enabler to make that finance more accessible and easable to a lot of users, right? So that's where, as Nikhil said, it's never too late being in the fintech. Today we have more of UPI transactions, more of digital transactions happening around, and there's a long way to go. We have seen, as you mentioned, that more than 8,000 fintech startups have raised more than 8 billion in India itself with 5 unicorns. There are much more to come in the coming decade, and we are very bullish on this sweet spot in the coming years for the Indian fintech startups.
Great. No, I think very great insight that as an investors, it opens up a lot of opportunities. Of course, I am sure it must be in a lot of minds that hey, fintech bus is gone, and UPI is already so successful. Paris is, you can buy Eiffel Tower tickets now. So I think a lot of this conversation opening up that that it's still a lot of juice is left and a lot of opportunities are there in the fintech. Now, recognizing the potential of startups, what in your opinion are the key indicators that signal the fintech startup has potential for significant growth? Of course, now we established that there is a market growth opportunities out there, but does the disruptive technology play a major role? If so, how? And in context of startups, scalability and adaptability, how do you see that? So my larger question is that as a investors, how do they recognize the potential of fintech startups in this space? So some insights would be great. Abhishek, maybe you go first this time.
Yeah, sure. So, finance come with the two word, which is finance and the tech, right? So it all depends on a product. Is it more towards the finance solving side or a tech solving side? Let's just give you a couple of examples that OTP verification, eKYC, those are the tech enablement helping the finance to be more cohesive and more quicker, right? So it all depends the kind of startup you are trying to solve problem with. We have P2P lending platform. We have other platforms for trading, so on and so forth. So as a founder, as a product, you have to see where you are positioning yourself. No doubt, when you are getting into fintech, tech has to play a critical role. But the more critical role is what problem you are solving, what thought you have, what groundbreaking problem you are solving with a particular niche. The good part with the fintech is that it works at the back end for every kind of business. If you talk about tech, e-commerce, irrespective of the finance, irrespective of the industries, they can't run without the fintech. I think most of the people don't realize, but fortunately, every business is supported by the fintech. Right. So end of the that you have to figure it out the problem you are solving to make that system more cohesive, either a B2B way or a B2C way. So both kind of value has a good hold in the fintech, and that's what we are looking forward. What Indian founders are coming up with in this coming era for the investors to look upon. And touchwood, I would say that when me and Nikhil we tried to figure it out what domain to pick up, we found that fintech has been the backbone, but coincidentally, not too many investors or cohort are playing a critical role in fintech. And that's where we put our foot forward that this is the right time to give the hand holding to the fintech startups for the Indian company growth.
Sure, sure. Nikhil, your view
Oh,
on how do you recognize potential of fintech in terms of in technology, or how important around scalability and adaptability? You have been in this area for long enough, so what's your view on this?
so I'll try and answer that question, Govind, in two different parts, right? In two different forms. One, well, let's begin with the easier one first. So let me support what Abhishek just mentioned. That very important that the application of this as a space, as a sector, is across different categories, across different sectors. So whatever sector we talk of, cannot be, or rather, it would be incomplete without the involvement of fintech, or for that matter, fintech in today's time and during the conventional days, more about the banking and the financial as a core basic sector. So definitely, since the application is there across different categories, so we're trying to reach out to a larger audience. So regardless of what sector we're talking about, since the application is there in place, it makes a lot of sense. Typically, if I was to look at it from retention metrics perspective, or recurring income perspective, or sticky income, as we used to call during my banking days, so it is all there, definitely. Secondly, the fund manager in me answers that slightly differently. And when I talk of numbers, or when I talk of actually traction that is being created, so like I said earlier, a lot of things have actually evolved now. And the good part is that because of the rise in the volumes and the newer solutions coming up, definitely fintech acceptability is much larger. And I will quickly also add that it is applicable across different segments. So whether I would look at it by way of maybe the Gen Z or the Gen X generation we're talking about, so yes, it is applicable there. If I'm talking of any traditional and conventional businesses, it is applicable over there. I already mentioned that across different sectors, it is applicable. So definitely, there is a lot of scope when it comes to usage of fintech as a space, and that is something which is very important for me as a fund manager to look at, right? So because I will want to look at the kind of an income flow, the kind of revenue flow that any of the fintech companies are experiencing, and
Mhm.
that fortunately, thankfully, that stays intact. So uh, I will also one last thing which I could add over here also is that when we're talking about the number of companies in the fintech space or in the finance space today, historically we actually look at it. Each one of them has their own space or bite to be taken. So it's a wide market, it's an open market, and yes, if the fintech or that particular startup company is able to build up their own space and offer a solution for a bottleneck or a pain point area, coupled with a couple of hand-holding solutions provided to them in the right way, there's no end to their growth. Definitely, I'm personally very bullish on that side itself. So
Sure.
yes.
No, I think very interesting perspective, Nikhil. And one related question and kind of a bit more tangent around, this is that you mentioned about the pain points and the areas of the fintech. Can you just in interest of audience, both investors and startups who are listening in, what are the, in your view, what are the big pain areas that you anticipate is going to come in the fintech space? Or what do you feel is the unmet need today where a lot of potential of fintech lies, right? So can you name some of those? It will really help us to kind of give some insights on these areas to our viewers.
More than naming the particular company, I think I'll name the subject, right? So we are talking of transition over here. We are talking of evolution over here. So let's bring back those days when in the equity in the capital markets we used to actually see a lot of research based solutions being provided. How robust, how convincing, and how strong those research-based solutions were. It was all manual intervention at that point of time. So I don't know if it would be right to take a bet on it in the right way as an investor, as a traditional layman investor, if I was to look at it. But looking at the current days, we are talking of research which is algo based, right?
Hmm.
So algorithm based solution, definitely the success ratios or the way we are trying to look at achieving targets in the capital markets, it increases for sure. It's machine learning behind it. So when these kinds of technologies have come in, definitely the biggest benefit which arises out of it, or the biggest beneficiary, is the end user, is the end consumer. So from a research based, traditional research based equity solution to an algo based solution, it is a transition. And uh, I will also support that by saying that we have still not seen much of developments happening in that direction. So definitely, any company, any startup company which is in that particular space, I think there's no end to it. There's lots more that they can actually look at, both from a retail perspective as well as institutional as an audience for them. So this is a very classic example which all of us can relate to very closely, because we've um, uh, we've seen a decade back, 2 decades back, how solutions were given and what kind of recommendations were given, and we are only getting thicker from there. We are only getting much more foolproof from there. So yes, this
Hmm.
is one of the examples which I can very quickly kind of think of, and I'm personally looking at this also as a niche segment, by way of this cohort, in fact, that we're talking of the fintech as a space. I will definitely encourage all those companies in that particular space, in the capital market space, to come apply to us. We are more than keen to evaluate you.
Sure. No, I think, of course, before, I think, Abhishek, maybe you can build on this question is where about, you know, of course, accelerator as a program, for startups. I think it's a breeding ground for investors to find, right investments also. Typically, how do accelerator really shape the investment worthiness of fintech startups? Since you have seen in, you have been a founder, I'm sure you must have dealt as a with accelerators at some point. So wanted to understand your journey, working with accelerators in the past, and how do they typically shape the course of action for startups, and especially in context of fintech startups.
Yeah. I
Sorry,
can
just one
see
more thing.
Nikhil.
Sorry, just one more thing. Yeah, Abhishek, before Abhishek comes in, I mean, I get so lured talking on this topic because it's so close to
I
me.
was getting worried.
Uh, so, also, one, since you asked me about examples, Govind, so again, a very classic example that I can talk about is in the wealth management space, right? We are now actually talking of wealth tech. We are now talking of, and we are getting deeper into it. We're talking about insurance as a space. We are talking about insure tech as a space now. where we are not just talking about insurance selling or an aggregator platform for insurance selling. It will not be appropriate for me to talk on this podium in terms of what company I'm referring to. But yes, it is not just about selling insurance. It is about claim settlement today, for example. And claim settlement only gets so A, it was an ignored area, and B, today we have a solution for it. So it only gets better from there. And who gains out of it? It's the end consumer, it's the end user who's gaining out of it, right? So this is the time when you're actually seeing the completion of the entire cycle from end to end as a kind of a solution. So definitely, yes. Again, one more feather in the cap to the fintech space is insure tech, for example, wealth tech, for example. So these are very very promising spaces that have evolved over a period of time, and it only gets better from there. Sorry, Vishek.
No,
Oh, yeah.
no, sure. I think great insight. I think it's very very
I would
interesting
love to
for.
add on to that what just Nikhil said. As a fintech, I am looking forward for is that as of now, still just a 20% of Indian population are using the digital payment, and still 80% are get used to it, which is the tier two, tier three kind of populations. They have access of internet, so may not be having access of internet, so on and so forth. So as an investor, as a cohort, what I'm looking forward of those kind of bigger chunks of the population who still don't have the access of the tech enablement using the finance. And that's where I think the major game role plays for the new emerging startup in the fintech. If we're able to solve that kind of solution with or without internet for those users, there's a game changer. Okay. So second thing, rightly said that insurance, wealth management is still not very much deep down to the tier two, tier three kind of audiences. Whereas every kind of product, which includes your farming, which includes your life insurance, medical insurance, so forth, those kind of things need to reach to the larger audience. But still, as of now, those are still very much to the tier one kind of populations. So a lot of bandwidth still available for the fintech startups to go deep into the startup ecosystem for the Indian population. Those kind of startups, if they are looking forward on these sessions, please feel free. I think I'm pretty sure Govind will be putting across few words that how you can reach to Nikhil and me and seek support through this what we're talking about. And yeah, I think that to add on to Nikhil conversation.
Sure. No, great. I thanks Abhishek and Nikhil. I think very very interesting areas that investors or startup founders may want to kind of know that there are a lot of unsolved problem around insure tech, wealth tech. Of course, getting it to the more masses and creating solving the technology challenges which we have. But and as I said, Abhishek, what I also want to build on this, now the problem is identified in that sense. Of course there are startup ideas, technology people, uh, how they can benefit from the ecosystem which is already existing, like the support network. Accelerator programs are great, by the way, in terms of supporting them. Incubators are there, a lot of incubators by the universities are existing out there, right? So what I wanted to learn from you is your journeys as founders, or you have seen some founders, getting associated with such accelerators in the past, and they shaped the entire journey of these startups, right? So wanted to understand a bit more role of accelerators in terms of the journey of a startup, and what stage they should be considering accelerator or incubator, or these kind of situations. So if you can just share some ideas and some pointers around it, I think that would be great for our audience.
Govind, can I ask Nikhil to take on this question because I think he is just getting way to speak on this topic particularly.
No,
So
absolutely. I do want to learn a bit more about the thing that you two are doing together, but I do want to kind of
absolutely,
first establish that you know
absolutely.
why accelerator, why not, at what stage, what is their role, just help us understand a bit more from a founder and also investor perspective,
For sure.
because
For sure.
these accelerator programs are also breeding ground for good startup investors
Absolutely.
investment, right? So help me understand a bit more.
See, as a early stage startup, or I think irrespective of any stages, even if you are a unicorn company, every startup need to have certain kind of handholding depending at what stage they are. Okay.
Hmm.
So that's where I think the accelerators, incubators, mentors, advisors play a critical role to ensure that startup understand the nuances they avoid those mistakes that already been said and done, and they can focus on a major area that need to be solved rather than just going haywire. So that's where the incubator accelerators play a critical role. Okay. So if I talk about what we are coming up with, it's much more than that. The kind of expertise, the kind of panelists, the kind of program we have as of now for the fintech is very thorough. This is going to be the 4 month program where all the panelists we have from the last 5 6 years on both the organizations, me myself into the fintech, and Nikhil has lot of experience in this segment as mentioned already. Our expertise will ensure that the fintech solves a particular set of problem, and most importantly, comply with what is required by the government. Because fintech is the most challenging when it comes to the compliances, unlike any other domain. We talk about the e-commerce, B2C, those kind of things doesn't come with any kind of compliances. So this fintech have a lot of threshold upward and come with a lot of compliances. And that's where this research program put a foot forward to help the startups be compliant, be strong tech product, and solve a particular set of problems for the larger audiences. And that's the whole process of this program. But I'm pretty sure Nikhil is more of a right guy for this to bring you more insight on this expertise as accelerator. So Nikhil, on to you.
So between me and Abhishek, on a lighter note, we usually play the good cop and the bad cop, right? So Abhishek is the good cop and I'm the bad cop around. So he leaves all the dirty work to me. So, but I'm happy to pick this up. Uh, Usually, it is said that the key to success in the startup ecosystem is being there at the right time with the right set of people. I will add one more thing to that by saying that it is not only just being there at the right time with the right set of people, but exiting also at the right time or moving out of the entire rat race also at the right time. And that is exactly where Govind and Accelerator is expected to come in. How much of it is being done in India? Let's not go that side. But yes, that's the objective of an accelerator. That's the distinguishing factor, the differentiating factor vis-a-vis the other genres of investors that we're talking about. Like you mentioned, right from the incubator stage to an accelerator coming in, to the angel networks coming in, so on and so forth, going ahead across different round constructs and round sizes. But yes, if I'm able to play my role well, if I'm able to kind of deliver as what is expected from an accelerator, I think it is more than half battle won. I could support that by giving you a few statistics that not only in India but globally, if a company or a startup company usually has to look at a downside or has to fail, it is during the initial 3 or 4 years time frame, right? Though by definition, the it is actually mentioned that till the time you're there in system for 7 years or 8 years, you're still considered as a startup player or as a startup company. But if you are done with your teething problems in the initial 4 years time, no ground rule to that, but out of experience that I can talk to you about, and I'm sure Abhishek will support me in saying that if any particular startup company has kind of passed that stage of the initial 4 years time, I think they are good to move ahead and to scale up. Usually, that's a set pattern. Having said that, in these 4 years time, there's a lot of support which is actually called for, and fintech of course being one of them, but this is more as a generic rule which is applicable to all the startup companies in every particular sector. The problem is that as founders of any startup companies, we fail to realize that. So and again, it cannot be blamed, or they cannot be blamed because they generally tend to catch the first lucrative offer or the first lucrative kind of a plus point which comes their way. But I think it'll be a good practice if we can follow certain protocols, certain steps, and if we do that, I think then nothing stops that particular company, as long as you're creating a space for yourself, you're creating a differentiating factor for yourself, disruptive in its own way, and finding a solution for a problem point area. I think it's good to go. Second part to my answer is also that the role of an accelerator. So, and not just theoretically, but more when it comes to practical usage of an accelerator or the positioning of an accelerator. If I'm able to add value in three different areas, or four, I must say. If I can, definitely, as all of us understand, money is a fuel for any startup company to keep it going. if I'm able to invest as an accelerator, which is not what is expected from an accelerator, because an accelerator is meant to provide more of a support and not just investment, or the other way around also. So A, as an accelerator, if I'm able to invest in them, it's a good startup point. Secondly, if I'm able to provide all the necessary functional support, because we should also respect the fact that every startup company has got lean team structures and tight budgets to work on. So if I'm able to onboard that particular company and take on my shoulder certain bit of responsibilities when it comes to functional support, that's the second area which I add value towards. Thirdly, and the biggest one or equal weightage which I will give, like you also somewhere mentioned initially, that the right set of handholding. It gives both Abhishek and myself immense pain when we actually hear this word handholding, right? Because handholding or support is a loosely held word or a loosely used word. But yes, in true sense, if you're able to provide a lot of internal and external ecosystem support, that is what is expected from an accelerator. That is what a startup company looks forward to. It is not just the investment which they're looking at. It is the functional support. It is the ecosystem support which they're looking out for. If I'm able to add value by the way of these three core strengths, and fourthly, also getting in a co-investor or topping up my own exposures, or very diligently doing a matchmaking in terms of who are the right set of investors to be kind of reached out to. If I can do that kind of a detailed analysis and put it up to them, I think all the areas I have covered up where a startup founder will want to seek support from an accelerator, and if I'm able to do that, I think I've done my job as an accelerator. That's something that Maruti Catalyst has been doing for a long period of time, and that is what by way of this program, of the corporate accelerator program, Maruti Catalyst along with Captable, this is what you're wanting to put up out there as a show, right? So the in one line, if I can answer that as a summation, I can say it is basically using the strengths of both the companies, resources of both the companies, and offering a solution to the shortlisted companies. Yes.
Sure. No, I think really great. I think both Marwadi Catalyst and Captable coming together, creating this absolutely fantastic program. And I think I'll request my team to definitely put this link where people can apply, and I'm sure they can reach out to you on LinkedIn about it and ask more questions. I think it's very very interesting to understand how fintech accelerator is different from, maybe it needs a more specialization. People like yourself and Abhishek, who has done this, been there, done that, and also understand the nuances of fintech, right? So I think it's a very very good combination. I really can see that why it makes sense to have Nikhil and Abhishek in the same room, good cop, bad cop, kind of combination, to be able to build a great accelerator program. So I think they're really, really, great to know about it. But to extend this question, what you, of course, in terms of founders, or in this program, who may be coming your way, what are your evaluation, or how do you typically look at a fintech startup? How do you evaluate this situation? And then I'll also ask a different question: how you evaluate potential investors, or angels who are coming to join you as support in this program. So but first, the startup, what is your, like, how you really see or envisage to really run this accelerator? What kind of criteria that you have set for yourself to evaluate and work with fintech startups? And if there's any number of cohort members that you have fixed so far, would love to know about those as well.
So, if I talk about the founders, fintech point of view as a founder, so in any business or any startup, people are the key. So, if we as an investor, as a capitalist, are looking forward, we look for the people first. The kind of value they hold, the kind of ethic they hold. And I think that's the same reason that me and Marek Atlas coming together with this program, because we have same set of values, same set of thought coming together and gelling well. Same thing we see through when we are putting our checks in any startup. That if they have the authenticity to solve the real problem with the real values, rather than just goofing up with some way on a short-term basis, that's where we always defer to go forward for. as a founder, as a team, it's very important that you understand finance and the tech part both hand in hand. Uh, Tech has to be a big problem solver, no doubt about it. But yeah, they has to facilitate one problem for sure, rather than just focusing on too many things. Second thing, what matters the most in finance is go-to-market strategy. It comes with a lot of credibility. It comes with a lot of trust, especially in fintech domain, and that comes with a lot of product promises that you make to your certain set of audiences. Unlike e-commerce, unlike D2C, where people tend to have an impulsive buying, fintech doesn't work like that. So as a founder, you have to have a really through what should be your go-to-market strategy and how you are going to build that kind of trust for your customer. It could be for the corporate, it could be for the MSMEs, or it could be for the B2C kind of audiences. That's the two critical thing if I talk about it. Second thing that is most important is the kind of board members you have. That's where the game lies. As a founder, you must be trying to solve things, but if you have a right set of board members, directors, advisors, mentors alongside with you, that gives a really comfort to the investors like us that you are at the right set of people. And I think that's where this program and the collaboration of these two organizations coming forward to give both kind of support to the right kind of people, mentors, advisors, and right kind of ticket size to help them grow in the fintech domain.
Sure. No,
That's
great. Great. Nikhil, I would rather want you to also explain a bit more around numbers, if there's any specific ARRs or, team size, check size. I mean, you can talk, you are a numbers person, so would love to know about anything that you have tied up in the program as numbers in terms of startups. It would be good to know and good to, of course, whatever you can make it public. No, no, of course, but it would be great to know about the program and so that people can really appreciate if they fit in this program or not.
Sure, sure. So I was to reserve this part of it for the last kind of part of the session. But since you brought this up, definitely go in. When it comes to the identification, let me first answer your initial question in terms of what are those points on my checklist, which as a fund manager we usually look out for, and now that it's a blend between Maruti Catalyst and Captable, it only gets thicker from there. But yes, amongst the various things which I have on my checklist, those a usual due diligence checklist which I have, which will comprise of say about 20, 30, 40 subjects on the checklist. I think first thing first, the area which kind of intrudes me or which gives me a lot of interest, creates a lot of curiosity, is like Abhishek also mentioned, knowing about the founders, right? Because definitely fintech as a space is a highly skilled and a specialized space. So definitely something which is important is what kind of a core team that we're talking to about. So whether the core team has got any hands-on experience, definitely that is something which is of great importance, because that's the kind of an objective, or that's a kind of a problem point which startup is posed to kind of offer as a solution. Also, whilst it might not sound that relevant, but yes, somewhere as a my subconscious mind also places a lot of importance whether it's a single founder led kind of an organization or a single founder kind of a company, because the objective is that if I have a co-founder along with the founder, it the intent should be to kind of complement their skill set and their expertise. So typically in the fintech space, like we've been seeing a lot of either product people come in, or ex organizations that they've worked for, they've handled a particular function and they've kind of identified a gap and they're trying to revolve a solution around it. And that's how a startup is actually born in more often than not cases. But not only that, if that be the case, then the founder is only equipped to provide a solution, must be a product person or must be a go to market or a salesperson. But so like it is said, कोई भी धंधा खाली घर में बना के नहीं चल सकता है, right? So you need to kind of reach out to the right set of people. You need to kind of have a GTM in place, a go to market strategy in place. So definitely how equipped the founders are to cater to or to service across these different functions is something which is very, very important. Also, the reason being because the space that we're talking about, or the segment that we're talking about, is a startup space, right? So we might not have that much amount of CMA data or a track record to be spoken about, but yes, if the founder has some hands-on experience and skill set and expertise, so it gets better from there. Secondly, I also place a lot of importance on seeing how cluttered that particular space is. Until and unless a company has got some unique proposition or unique problem point area which they're trying to service, it kind of becomes a little difficult. I also place a lot of importance on my existing portfolio. So, for example, we are currently managing 80 plus companies in our portfolio across different sectors, almost about similar numbers to which Abhishek has onboarded at his end, either in his own capacity as an investor or through Captable as a platform. So, if we're talking together, if we're talking of 150 companies, definitely the idea would be not to create some internal clashes and drifts. On the contrary, if I'm able to complement each of these startup companies within a portfolio, it gets better from there again. So that is a silent eye which I will also want to keep open towards. Similarly, now the second part that you mentioned in terms of numbers. So let me bring out this fact that we do not usually look at companies which are at a pre-revenue stage, because the belief out of experience is that a pre-revenue company or an idea stage company or an MVP version company is requiring or calling for more of an incubator and not an accelerator. And together we are not incubators, we are more on the accelerating side, right? So definitely yes, we will want to identify a company which has garnered some early revenue, early traction. If I can quantify that in terms of numbers, again out of experience, it has been that the usual sweet spot that we look at is in terms of size of the company, it could be anywhere in the range of say half a million to 1 million USD. That's typically the sweet spot of a size or the value of the company that we'll want to look at, we'll want to identify. Adding up further in terms of what our check sizes would be like. So the way this program is designed is that in the first leg of the initial investment, and I can quickly add to that by saying that each of the companies that I'll be onboarding by way of this program, each of those companies will be getting an investment from the cohort, from the accelerator program. And I stress on the word will be getting investments because it is not unlike the other accelerator programs. It is not they subject to getting or subject to they completing the program. For me, in fact, on day one, the investment goes in, and that's where my ticker actually begins. That's where my journey begins. So that's the first thing that we would want to look at. If I could place a number to that, so in leg one of the exposures, we usually will want to look at about 20-25 lakhs of an exposure, give them a decent runway for the next maybe 3 to 4 months time, reevaluate them after 2 quarters time, and then get in a co-investor, and also re-explore avenues where we could top up our own investments. Having said that, for us on a forward integration, we work very, very actively on a real-time basis with, you name the angel networks or the funds, micro funds, family offices, whether domestic or cross-border. And we try to get into the shoe of the founder, where we do some kind of an apt matchmaking in terms of what stage the company has reached out to and what are the kind of genre of investors they should ideally kind of reach out to. वी यूजली हियर इन द स्टार्टअप इकोसिस्टम कि हमने यहाँ पे पुटअप किया है या हमने उनसे शेयर किया है, लेकिन किसी से कोई रिवर्ट नहीं आया है या किसी से कुछ पता नहीं चल रहा है क्या फीडबैक है. I beg to differ a little bit, Govind, there, because in our case, this kind of a scenario rarely appears. We would not, for example, we will not want to place a company which is at a startup stage, let's say close to about half a million to $1 million size of the company. We will not want to place them in front of a fund or a micro fund, because we feel that they are still at a stage where perhaps an angel network, with all due respect, I mean, everybody has a role to play. They are more apt to kind of get placed in front of an angel network or a strategic investor for that matter. If a strategic investor can bring in a lot of bandwidth and a lot of value along with their checks in the company, so they need to come in at that particular stage. vis-a-vis if the company has outgrown a particular threshold limit and they're good to kind of reach out to a micro fund or a fund, uh, then we would accordingly kind of place them in front of those set of investors. So these are the kind of criterias which we intend to place in the cohort in the joint initiative between Minority Catalyst and CapTable, and that's how we are wanting to look at a lot of successful startups come out of this cohort and be a part of their entire journey from end to end. Yes.
Great. No, thanks, Nikhil. I think thank you for sharing these insights. I'm sure people who are listening in and kind of fit in this conversation, or if they're watching it later, I think it's a great platform. Very rarely I have seen such things happening. Such a great clarity of and more focus on the program. Now, building onto it, of course, one question that investors usually have, fintech being very, very regulated market as such, right? I mean, RBI practically has a lot of influence of, building a company or breaking a company, right? So, in terms of your, generally accelerator programs, you bring in investors as well, right? I'm sure people are looking in as investors or potentially want to be part of the ecosystem as investors. What's your view, and what's your kind of advice to them? Because fintech sounds great, yes, it's a great opportunity, but at the same time heavily regulated. RBI can make or break one order, and overnight things will be different. So how do you typically tell our investors or investors who are thinking about this area, what should they be thinking, what should they be knowing about this as a whole? You've been a banker, both of, I mean, Nikhil, you have been banker, and Abhishek, you have, so just jump in. I don't have any preference who starts first. So take a shot.
Abhishek, you
So
want to take that up?
yeah, I think I would love to. So as an investor, we have our checks in a lot of sectors: e-com, D2C, tech, and tech. But when it comes to fintech, we have to be extra careful, right? When I was starting my fintech, the first thing that we onboarded was the compliance team, the attorneys, to make sure that our do's and don'ts are clearly specified. SOPs are well documented, and that's how the journey should begin for every startup in fintech domain. So when as an investor, I always look forward for that's the first thing to do with. If your SOPs, your compliances are not intact, you're not regularized with the right set of bodies, then it's going to be a challenge in longer run. It might be a small today, but as you go further, a lot of eyeballs will catch into, and a lot of customers and government bodies will be pouncing on you. So that's become a really mandatory part. So as a startup founder, the first thing you have to ensure that you have to have attorneys, compliance, supporting advisors in your team to ensure that you are good to go for long run. When it comes to the investor side, it's always a hard journey if you are sailing it all alone, I would say. And I think I have learned it my way. And when it's especially the fintech, it becomes a bigger challenge that you might not understand the nuances of the tech, you might not understand the nuances of finance, and then the compliances. It's always advisable that rather than going through all alone, if you have somebody who comes with a lot of expertise to ensure that they're also having skin in the game, the right set of manpower and the investment, then nothing better to join them. It's the best advice I think when you're trying to invest in any fintech, irrespective of any other domain. So that's where that we both of the organization MCAT and CapTable is coming in, because we have our nose picked up in all the startups that we are going to pick up for this cohort. We have our check sizes, we have our set of mentors, advisors, and compliance team especially to ensure that those thunders are well controlled, well on time, and this could be the way forward for a lot of investors and founders who might be finding it too hard to sail through. With a lot of news around in the past, and as well, it will be in the future for sure. But with the right set of people and compliance team, that should be the sorted out in the long run.
Sure. No, great. Nikhil, your take on this.
So I think Govind, fintech, of course, it's a little deeper when it comes to regulations and compliances. We definitely ensure a to begin with. I must say that we are a compliant, not only a compliant savvy, but a compliant loving organization together. And I can take the liberty of saying, and I'm saying we, Abhishek and myself, being on the same side, right? So Maruti Catalyst and Captable, we are a compliant loving company. I should address it that way, because we are in the business of passing on a lot of trust and conviction to both sides of the table, whether it is the startup founder or, for that matter, even the investors that we onboard. So we don't have an option in that any which way, right? And not that we want to go that way. Secondly, I should also be saying that we try to follow the pattern of a prepare and a checker kind of a pattern, right? So I should also be saying that at least the first level of support when it comes to functional support, and I can talk with great amount of conviction towards areas like legal, finance, accounts, due diligence, compliance. This is the first leg of support we provide in-house towards all those companies that we onboard, and then we get it checked by maybe a third-party service provider or so. So anything and everything which is there when it comes to the startup companies from day one or day zero, for that matter, we are more than it's on top of our hands. So we are completely in sync with it. Secondly, also in the same direction, we ensure that the companies are not going out of proportion, and because we've been early participants in each of those companies, we get that kind of a leverage. We have that kind of an interaction and relationship with the not only with the founders but with the entire team of that particular startup company, and that's something which we try to leverage. And more than leveraging, it is about passing on the same message to the founders that. It's a win-win. It's important for everybody to be compliance savvy and to follow all the necessary norms which are required. So fortunately, till now, out of the 80 companies that I'm talking about, and I can take your input on that. I don't think we've seen any particular company or any particular founder who is not kind of agreed to this point and who has not been a part of this. So definitely, that is something which we have been consistently following over a period of time. Now, talking from the investor's perspective, also, like I initially mentioned, there are different genre of investors, Govind, which actually step in the startup ecosystem, which is subject to the stage of the company or the size of the company. Whether we are talking of the early investors to come in, whether it is the family and friends coming in at the very, very early stage or the idea stage. And on a lighter note, I must say that it's not just about family and friends coming in. I add a different F to it also, which is family, friends, and fools coming in at that stage. So, right from that particular stage, going up to a private equity fund across different stages, it becomes imperative that the investor should also understand how compliant we are and how much regulated space we are into. And once we are able to pass on that bit of a conviction to them, because that is for me as an accelerator, that's a distinguishing factor which I'm in turn trying to create towards my audience. And my audience in this subject is more of the investors coming in. So until unless I do that, I mean, you don't want to go away where there's a bottleneck and you can actually foresee a bottleneck coming up, right? So that's the least that any of us want to do. And for sure, not following compliance and regulation is a dead end. It is a bottleneck. So that's not what we encourage. That's not what we wanting to do. So rather than stepping in at the 11th hour and taking a call on it, we try to ensure that that is pretty much followed from day one and over a period of time through that journey. We keep a very uh, so whether it is with regard to a watertight agreement or right to information or anything that we can talk of, all of those checks we try to keep in place.
Sure. Great. Thanks, Nikhil. And my last question. It's been 1 hour. It's time flies with when having a great conversation. So my last question, and it's a bit of a controversial and a very short answer. Seeing what is happening to one of the poster boy in fintech in India, what's your take? Is it going to really go, change the industry landscape to the next level? It will be probably a precursor to make the newer jumps in the industry, or it is going to slow us down for some period of time. So what's your personal view on this. I appreciate your bit of personal view that what will happen in your prediction, so to say.
So, our take on this has been that, see, we cannot decline the fact that it's been a case study by itself, right? We've seen a lot of success stories coming in from that stable. We've seen a lot of
Okay, looks like
businesses that have come
Nikhil
in.
connection has some problem. Abhishek, you are here?
Yeah, I'm here. I think Govind, yours.
Abhishek, yeah.
Hello.
Hi.
We can
Yeah,
we can
hi.
hear you, Govind.
Yes,
Yeah,
yes.
we can
Sorry,
hear
I
you.
lost you for a minute. Looks like my connection. So, Nikhil, sorry to interrupt. Please go
Yeah,
ahead.
yeah. No, so I was saying that we cannot decline the fact that the company that we're talking about has been a case study by itself. We've seen a lot of uh, evolutionary approaches coming in from that stable, from that side of it. So I've personally always been kind of bowled over by that particular company and the approaches and the solutions which they've which they've tried to come out with. So I don't think that that's a bottleneck. Definitely, there's a lot of spring attached to it, and they will definitely bounce back in their own form, in their own way. Uh, Second thing which I could add to it is, or ironically, in fact, it is like it is said, it is half information or half knowledge is bad knowledge and bad information, right? So the bad part is that everybody still does not know about what has actually happened in the past 2 3 days time. I think it is time that before actually deciding or before taking a call on anything, it is at best to educate ourselves and then to kind of bucket them on this side or that side of it. And I'm still end of the day I'm still very bullish on that as a sub piece, also as a subset also. So wallet companies is again something which is on a real time basis, on a day on day basis. They're coming out with some solution or the other, and it's only going to benefit the end user, the end consumer. So my take on it is that I'm still very bullish on it.
Great. Thanks. We are out of time, so I have to now go to the summary section. Uh, so thank you, Nikhil and Abhishek, for coming to the startup series. And before we close, it's customary, I would request you to have your 3 tips to our audience for investing in startup in fintech specifically, and also somehow like a cheat sheet for investors in this space, or who are contemplating to be investors or maybe founders at the same time. So anything very short, like a 3 key takeaways, of course, with this fintech conversation we had. So maybe Abhishek, you go first.
So, as an investor, especially in fintech, never go with the guts. Uh, Go with the expertise. If you're looking to invest in fintech startup, first thing. Second thing, focus on the founders who's solving a specific set of problem rather than just trying to solve too many things in one go. And third thing, that compliance is like unsaid and compromised thing that need to be part of it. If the founder is lethargic about it, that means he's not serious about the business. So that's the most important thing as an investor. You have to look for that as a founder, how concerned he is to make sure that the compliances and the set of audience customers he's going to serve is going to be intact with them for the longer tenure.
Sure. Great. Thanks, Abhishek. Nikhil, your final 3 takeaways.
So, Govind, it's nice that you mentioned that keep it short, because we could have gone on and on talking about this as a different subject by itself, right? So, I mean, I can talk endlessly when it comes to investors, positioning, putting it up to them, trying to kind of address their gray areas and stuff like that. But yes, to keep it short, I think I think the key for investments in the fintech space for any investor would be to look at, and because it is a highly skilled and a specific sector as a space, I think it becomes important for the investor to look at an opportunity which has come out of slightly being a little more filtered, rather than purely looking at it from investment perspective. So it is at best to look at a company which has either come out of the incubator stage, which means that uh, perhaps the initial setup related errors and the issues are kind of taken care of there, because that's what an incubator is actually expected to deliver. Secondly, it could also be any company coming out from an accelerator program, which means it might become a little expensive as compared to taking up an exposure in leg one. But trust me when I'm saying that for an investor, it still makes a lot of investment sense. So definitely, this is one approach which they should kind of look at. And secondly, and specifically in the fintech space, like we have been speaking since the past couple of minutes, also it becomes important to look at a company which is trying to provide a solution. So there are enough and more companies in the fintech space which are either just replicating a business model or kind of just trying to set up a company in a, be it in a different location or catering to a different segment. But I think it is time we look at it in a holistic scale. We try to look at it as a complete package. So if there's a problem which is identified in a very robust solution which they've come out with, that is something which an investor should look at. And thirdly, to complement that, also, if it only gets better, definitely, where all of us as investors will want to look at if there's a disruption that is being created in whatever form. And you asked me for three, I will want to take the liberty of adding a fourth one, that yes, certain numbers definitely speak a lot about the business acumen, the approaches, and the trying and testing of the business model. So if there are certain numbers in place, certain revenue which is already clocked in, it cannot get better than that. So yes, these are the three or the fourth area which an investor should look at. And इसके अलावा और बहुत सारे पॉइंट्स हैं, तो उसके लिए हम है ना.
Bilkul. Thank you once again. We are out of time. Thank you, Nikhil and Abhishek, for being here. And my team will, post your LinkedIn addresses and also the way people can apply to the program. I hope that it will be useful for people who are thinking or contemplating applying, or they are going to be, reaching out to you. So thank you so much. Have a great evening. What a great way to start this week. And thank you. And to all our audience, you can follow Abhishek and Nikhil on social media. And of course, looking forward to staying in touch.
Thank you,
Thank you so
Govind,
much,
for that
Govind.
great session. And me and Nikhil are looking forward for some exciting fintech startups and the investors who want to grow their portfolios. We welcome them with both hands. Thank you for the fantastic session.
Thank you,
Thank you
Abhishek.
so
Thank you.
much, Govind. Thanks.
And all the audience, you can follow me and Arctic Invent for the startup series. We are going to have more and more sessions, and of course, a lot of content around IP and patents as well. And if you have any questions, suggestions, please let me know. We are more than happy to hear what you want to hear, what kind of guests you want me to bring in, and follow for more content and startup series event. Thank you for your support. See you in the next episode.